Hi everyone, welcome to the accumulation data analysis for 10th of May. So today was quite a decent day. We at least did not fall like what we were doing for the last few days. Even the Nifty kind of held its position and the small and mid caps ended a bit in the green. So we look at what the data is saying, what the chart is saying, and what we can expect in the coming week, right? So starting with the VIX, so India VIX, you can clearly see that the wick on the top is kind of putting a little pressure as well. Maybe it can do a breakout retest also in the coming days in case the panic or let's say the volatility kind of cools down, right? So that is also a possibility looking at the wicks on the higher side. So usually the wick on the top side kind of tells us that there is some selling pressure at the top. So that is what the wicks is kind of telling us. Maybe it can come back to retest in case if there is some good news which kind of calms the nerves of these bulls, right? So chances are it can even break down, or my best bet is it will kind of do a retest of this breakout and from there probably move up. So usually whenever there is a decent breakout, right, they do come back for a retest. 90% of the chances it kind of holds as well. So let's see what it does. And coming to the FI DI activity, so the FIs continuously they have been selling. Even yesterday they sold around 7,000 crores, 6,994, and the DIs kind of bought 5,600 odd crores. So their selling is not stopping, right? Probably today maybe the number might be a little lower looking at how the Nifty has kind of closed, right? So what exactly are these FIs doing? So what I feel is if you look at the Chinese index, the Chinese index has kind of broken out of a sloping resistance and also gone above the 30 WMA, which kind of tells us that there is a good momentum that is building up in the, so this is the Hangseng chart. So high chances that the FIs are kind of booking out of India just before the election results and stuff and moving their money into the Chinese market. So the Chinese economy, or let's say the Chinese market, in the last 3 weeks has gained almost close to 3 4 weeks has gained almost close to 18 odd percent from a level of 16,000 to close to 19,000 today. While our index, that is the Nifty, in the last 7 8 sessions has lost close to 3 or 4 odd percent in the same period. So high chances that the FII money is kind of moving out of India because few were complaining that it is little on the expensive side, and Chinese market because it was relatively quite cheap. So chances are it is kind of flowing out of India into the Chinese market. Now coming to the Nifty analysis, the large cap accumulation, it is little on the lower side. You can even see it on the Nifty chart. So if you go to the Nifty, this is the intraday chart. So intraday we just went sideways. So nothing actually we did today. A little gap up or let's say flat opening we had, and then we just moved sideways the whole time, right? Nothing really great that happened today, just consolidation, I would say, at the bottom after this fall. So if you look at the chart, so it looks more like a bullish harami candlestick pattern that is made, which is usually a reversal candlestick pattern, right? But the volumes, if you see at the bottom, the volumes are not that great. So what do you do in such cases? So either of the two things will happen. If the index kind of goes back into that parallel channel range, then we'll be sure that it is going to move higher, right? Because the volumes, if the volumes were like really strong, I would have said that we could have moved much higher, but without the volume support it kind of makes it difficult. Although there is a reversal candle, but it becomes a little difficult to kind of say with certainty that it is going to move higher. So the best bet is if it kind of goes back into that range, then we can be sure that it is going to move higher from here, right? So now the best performing sector was the metal index. So now that the Chinese economy is recovering, or the Chinese market is recovering, people are now bullish that okay, even the metal consumption might come back. But there is a catch to it. Let's say if the US goes under, then the Chinese, who kind of, the Chinese economy, which is quite resilient because of their exports that have been happening, and most of those exports are to the US economy. So if in case the US goes under, then probably the Chinese will also go under. that is the Hangseng, and then even the commodity prices would kind of crash if that happens. Now coming to the bank nifty, this bank nifty have been continuously bearish on. So after making that top, it has been continuously moving lower. No really real reversal candle we have witnessed. Neither the volumes are great on either, right? So it is just continuing to move lower and lower every single day. Now coming to the mid cap analysis. So the mid caps, the data is on a lower side compared to the last 5 6 days, or you take for the last 15 20 days, right? So usually on a Friday the data isn't that great. This I've seen for like multiple Fridays. What happens is on a Friday, like I've told earlier also, the traders don't like to carry overnight positions, that is carry it over the weekend for Saturday and Sunday and then trade it on a Monday. Usually they would like to take fresh positions on a Monday. So that is the reason probably you have a lower this thing, right? If we had like a very strong accumulation today and with this reversal candle, which is a hammer, I would have been very sure that okay, we are now going to move higher. But nonetheless, since it has come back in that range, or let's say it has crossed above that resistance line, we can be sure that okay, mid caps at least will not face so much heat in the coming days. Probably there is already a reversal. Maybe on a Monday the data would improve, right? Because it was a Friday, the data is not that great. And also in today morning, I kind of made a video telling you the difference between a panic fall and a distribution led fall. And this fall that we are witnessing right now is more of a panic led one, wherein there was no real distribution at the top. So in such cases, very strong accumulation might come in, or sometimes even without that, because in the first case there was no distribution, right? So if the big guys have not sold, there is no real importance for them to buy again in huge quantity to make push it higher, because there won't be any resistance for it because they have not sold in the first place. So chances are with little improvement in the data also we can see decent reversals. But as of now the data isn't really supporting, but the candle is kind of reversing. If it continues being above this particular resistance line now, which will act like a support, then we can be sure that probably the bottom is already made in the mid caps. Now coming to the small cap analysis. So the small cap data also on a little lower side, right? If you compare it with what we were seeing in the last many weeks. But nonetheless, even here we kind of have a reversal candle, that is a hammer, which is one of the strongest of the bull candles, right? Bullish reversal candles. So here as well, what I would suggest is wait for it to move up another percent, and if it starts closing above that 16 to 26 mark, then we can be very sure that probably there is a bottom in place even for the small cap index. So here, as you can see on the chart, I have clearly written that there was no strong distribution. This I've compared it to the previous distributions that have happened. So looking at that, there is no real strong distribution that has happened. And also one good thing is the stock is still above the 230 WMA. That tells us that the trend is still up. So nothing really to worry here. One can continue being invested or taking stocks where the accumulation is very strong. They should do good in the coming week, right? So hopefully I'll see you on Monday with the accumulation data analysis. Thank you.